calculate that 28,800. Let me show you how you can calculate the 28,800. Remember we said we bought back these shares as at 450. 450. That's the price that we bought back. Minus average share price of 3 rand 6 cent. 4 rand 50 minus 3 rand 6 cent give us 1 rand 44. Then you can simply say this 1 rand 44 multiply by 1 rand 44 multiply by number of shares that were bought back, 20,000. It gives you 28,800, which is the difference between the price that we paid and the average share price. Why the retained income? The logical explanation would be that why do we take the other amount from the retained income? Is that the shareholders who are being bought out are entitled to just a part of the retained income. Remember, retained income is the profit that was not distributed. Now, these people is going out, he also get part of that retained income. He also gets part of the retained income. Right, it's fine. I'm sure we are okay up to so far. Now, these are the transactions happened during the year. Now, we come to the transactions that happened at the end of the year. We come to the transactions that happened at the end of the year. Now, on 28 February, now, that is at the end of the year, the second provisional income tax payment of 156,000 was made to SARS at the end of the financial year. Now, you are going to record this entry in exactly the same way as you recorded the first provisional payment. Remember, we had the first provisional payment. Here we said on 31 August, a check for 128,000 was sent to SARS as a first provisional payment of income tax. Now we are making the second of income tax, right? Therefore, we are going to again credit, debit SARS income tax. This is now 2014, February 28th, with bank, but now the amount that we paid is 136,000. 136,000. Of course, the other entry you would credit your bank account with 136,000 because money in the bank decreases. Right. That is your second provisional tax payment. So the SARS account is obviously very simple, as you can see. In fact, all these accounts are simple as far as I'm concerned. I hope you agree with me. In the syllabus. Now, on 28 February, a final dividend of 30 cents per share was declared at the AGM. I'm sure all of us know that the AGM stands for the Annual General Meeting of Shareholders. They say a final dividend of 30 cents per share was declared, right? Now, there is a difference with the first one. The interim dividends declared and immediately paid. This one we said only was declared which means it was not paid. And what does that mean? It means that we owe the shareholders that money. It was declared but not paid. Therefore, it is a liability. We owe that amount to shareholders. Then, that means now we go to our shareholders for dividends, and then we say on February 2014, on the 28th, we owe them for ordinary share. You'll excuse my handwriting, I'm trying to squeeze this. Dividends. And please, in your exam, also try to squeeze in the full name of the account. Don't write ordinary only or dividends only. Write ordinary share dividends. Try to squeeze it in, because if you write only dividends, you will not get this mark. Now, we need to calculate that amount. We have been told that it is 30 cents per share, but how many shares are there? Remember, we now had 400,000 shares in issue. That is the 350 plus the 50,000. We had 400,000 shares in issue, okay? 400,000 shares in issue, but we bought back 20,000 shares, which means the number of shares that are left is only 380,000 shares. Therefore, we are going to multiply that by 30.3. That will give us 380,000 shares multiplied by 30 cents. It gives us 114,000. Gives us 114,000, which means we owe shareholders 114,000. Shareholders for dividend is a liability. To increase the liability account, you must credit the account. Right. Then the corresponding credit entry would be made in the ordinary share dividends on 2014, February 28. Here you will have shareholders for dividends. Squeeze it in. 114,000. As we can see, this amount goes with that amount. That is a corresponding credit debit entry. I think now we should take a 5-minute break and send them through, and I would re-explain some of the things. Thank you.